Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Emily, I was thinking about all this recent inflation news and persistent inflation news is maybe a better way to put it. And I was really thinking that the Fed needs to start including cannabis in the CPI, because once they do, I think the conversation's over and inflation is solved.
Yeah, I think if cannabis as being as deflationary as it appears to be that we're seeing in each of these markets, I think the Fed could cool out a little bit. But I don't know. We thought it was they thought it was transient. I would not have agreed that entire time, but this could probably help.
It would certainly help. And I think one of the things I want to talk about today was this very surface level article that MJBiz published with the headline, California's annual cannabis sales fell in 2022 for the first time since adult use launch. And certainly a true statement. But I thought we could get into it a little bit and just talk about, what is driving this. Is there any good news here? Is it all bad news? What do other markets look like? And, how does this get fixed?
Yeah, I think that I'm glad we're going to dig in on this because this category is becoming more and more nuanced as the market matures, and I think it's important not to paint things in just broad strokes, but to truly try to dig in to understand what it means, and maybe if sales are down, what's happening in that area, and what can we think about on the go forward.
That's right. So the article talks about retailers generated just over $5.3 billion in taxable sales of recreational and medical marijuana last year, down 8.6% from roughly $5.8 billion in 2021. And those stats were released by the California Department of Tax and Fee Administration. So from there, they have a quote from Hearst Chain, depressed wholesale prices, which have made products cheaper for consumers, and the continued lack of retail outlets across wide swaths of the state have been the two big drivers of this trend, which, I would agree with. And what I want to talk about is really pricing. And, certainly we've talked a lot about access and the lack of access out there as a big problem. I guess to touch on that one quickly, I mean, there are these deserts, right? These cannabis deserts. And we've seen maps. I don't know. Those maps I feel like I've seen them float around a little bit. But it would be really good for the state to publish them. Maybe they do. But it's pretty surprising, how limited access is. And even in markets that have, quote unquote access, it's like how this industry has, quote unquote banking, right? Because maybe a handful of credit unions support it or whatever. So it's like, oh, there's banking. Maybe there's a couple license holders in a market. Oh, that's it's available there, right? But the access is a real problem. And I think it was last week there was an article from in Fresno, the city of Fresno of California, that has a budget shortfall of what was it? It was like $15 million, 15 million bucks. And of that, about $3 million was missing from their cannabis revenue target. And the reason is because there's only 2 stores. There's 19 license holders, and there's 2 stores that are open in Fresno. And Fresno has a massive population to have 2 stores. So when you talk about access for a city of 500,000 people, and there's 2 stores serving that whole place.
It's
So
actually
access, yeah.
It's actually over 750,000 people just within Fresno. Forget the greater Fresno area.
Oh my gosh.
So that's actually a really insane number to only have 2 doors open within just the city limits. And then when you think about the surrounding limits, which I believe are more around 3 million by the time you get to that area and before you run into a jurisdiction where cannabis is legally sold.
That is so many people. So definitely, lack of access is a huge problem for the growth of the industry, right? And a lot of markets just don't have enough retail outlets for the consumers. And like, I feel like such a broken record, but also it's like the geography, the location of these places, right? So even if a county has access, often they're relegated to industrial parks, business districts, like
Hmm.
away from Main Street. So
That's right.
certainly, yeah, that's a problem. We all know needs to be more access, just easier, more available on the main streets, not like out of the way. And we talk about some markets that have some interesting things happening. Was it in Chicago where you're talking about the store that's going to be combined with some other stores, and like that stuff is great. That's like a utopia if that was like California, right? If every location was like that, where you're just going to go run some errands and it's right there. You don't have to drive 15 minutes out of your way through an industrial park to go to a shop.
Well, and now today, the same the same day that we're doing this, there was news out about the the strip club that's going to be a cannabis retailer in Massachusetts. I was like, oh, good. Let's just add more cash based businesses together. Just put them all together. Let's get as much cash in the system as we possibly can.
I'm surprised that that headline is coming out of Massachusetts and not Vegas, not
Or
Nevada,
Jersey,
right? Or Jersey, right? Isn't
the
one of the
bada bing.
Terracins in the Bada Bing
It's
right near it?
adjacent.
Adjacent?
Yes.
Yeah, right, right.
It's the Bing adjacent, but
Bing adjacent. I love that.
yeah, but I mean, so, two-stop shop little situation. But I do think I know I saw Emma Buckerly post like something about it's like, we skipped right over banking reform and moved right into cannabis strip clubs. So I don't know. Let's just go. Everything's fine.
Well, that's one way to expand access for sure. But beyond access, I wanted to talk about the other statement, which is pricing. And I think that that statement in that article from Hirsch was around wholesale pricing, and certainly it starts at wholesale, but it goes all the way through consumer. And I pulled some headset data to really try and
Hmm.
understand, what is it, what's going on, right? Because it can be a number of factors. It could be people just going in less. It could be people going in less and spending less, right? Like when we're talking about inflation, maybe people just have less money to spend, and so they're spending less everywhere. So I really wanted to kind of drill into it a little bit to kind of see where some of these constraints are coming from.
Hmm.
So for California, I just pulled some data from January of this year, 2023, versus January of 2022, and just kind of compared the 2 months. And, California sales again are down a little bit when you compare, about
Hmm.
8%, which is what the 2022 versus 2021 numbers full year were reported as. But that 8% in sales, that's total dollars that were spent in January, down versus 2022. And the baskets are down as well. So a basket is a transaction, is a receipt. You go and you put a bunch of things in your basket and you buy it. So the average basket, the amount of dollars spent in a basket, was down about 13%. But the average items per basket were relatively flat, down a little bit, about 3%, which is pretty negligible. And average item price is down 10% January versus January already. But all that said, total baskets, when you look at January versus January last year, are up 6%. So there are more transactions are happening, but the transactions that are happening are at a lower price point. So it could be, people are just wanting to spend less, but the average items per basket are about the same. So it just points to, they're buying the same amount, but they're spending less because it's so much cheaper. And I think that's the big driver here, right? That's causing that, because the baskets are up, transactions are up, more people bought, or more transactions happen. It could be the same people. I don't know if it's more people, but more transactions happened in January of this year than they did of January last year. Yet the dollar sales are down a bit more, and that certainly points to pricing.
Hmm. Yeah, and I do look at consumer trends more broadly to see how the consumer's feeling. I know we've talked about this multiple times, and one of the things that they said was that there were sluggish sales leading into the Christmas holiday, but then sales on gift items, technology, different things, they did pick up after Christmas going into January, which indicated that people were waiting on sales instead of buying leading into the holiday. And so I do wonder, when you think about share of wallet, when your wallet has been strained a little bit. And also the CPI data showed that what did it increase, like 0.8% in January. So it's like 6.4%. Things are still going up. And I think
Hmm.
when you see what some of these data points are indicating, I think that it's not that surprising to me that you'd see a little bit of softness in January of this year if people are feeling a little bit of the burn of the spending that they did kind of post the holiday, grabbing onto those sales and different things like that. So I can't, we talk a lot about this. We don't live in a vacuum. We are not a credit based industry. I've also mentioned what's going on with credit card debt in our country. And I also just saw that the millennial generation is seeing an explosion of credit card debt that's eclipsing any other generation before that and at this time. And I think that's an important factor for us to contemplate as an industry, because millennials have been a core consumer group for our industry. So I do think there are different aspects that can weigh on what happens in our space. And again, this is where I think it's actually really constructive to dig in on the data, because what I'm hearing from you is that people are still going to the store. They're still so to speak, putting things in the basket. So how, as a industry, how can retailers think about merchandising to get more things into the basket, to figure out how to be a part of that consumer share of wallet? And also, how can brands do this in unit sizing or form factors so that they're able to fit into a wallet that's getting tighter and tighter for the consumer base? So, California, we feel it. Like, our gas prices are still high. I mean, they're higher than they were for the last few. I've lived here for 12 years, and I still get sticker shock at the pump. So, and I know I can't be alone on that. And we talk about it in other areas too, like food costs, all of those core things that you feel, even if they've come down, it's still higher than what it was. And I think that's something we can't ignore. So, it's just, one of those things. And then, of course, there's also efforts to provide, like we had Kyle on talking about point of banking, to provide digital forms of payment so people are not relying on just going to an ATM, pulling out cash, and facing the sticker shock of getting the cash out to pay for items. We all know that's a traditional form of friction at the closing of a consumer in any business, let alone our business. So I think while I'm seeing the impact of, as we were saying in the beginning, deflationary pricing per unit coming down on these products, I think what we're hearing, though, is that there's still interest in the category. And to me, that's really important news, and actually really good news. What do you think about this?
Yeah, no, I'm with you. I think it is good news. I think it's that 6%, basket growth again, January to January is good. I think
Hmm.
that it could be even higher with better access. Back to
Hmm.
the other, part of the reasoning behind this. So that's good. I think pricing in California, it's pretty middle of the road when we look at the
Hmm.
markets that Headset covers. Average item price, which is always a tricky area to kind of cover, because you
Hmm.
think about going into a store and the store's got hundreds of items and you're like, what's the average price in here? Right? It's like it
Hmm.
can vary so wildly, like on the types of products, like a single pre-roll versus a large amount of edibles, or a large amount of flour, right? Like 28 grams of flour or something would be much more than a single gram of flour. But an average item price in California in January, this is pre-tax, post discount, was about it's about $23, right? So just over $23. And then you can compare that to a market like Washington State, where the average item price is $13. Super, super low, right? And I mean,
Crazy.
the frameworks are different, the structure is different. So, California, while, it does feel that price pressure, it's still in a much better place. I mean, it's not
Hmm.
Illinois, where Illinois is like $35 average item price, or even Florida is, well, actually, Florida is more in line with California, but Maryland, these more limited license markets, still have
Hmm.
pretty strong pricing power. But California is hanging in there for a market that has or as big as it is, has been around as long as it has, it seems to be holding out because Washington went real fast to that low price. Oregon went real fast to that low price. So I think that your comments around like, maintaining that price, like how, that's something that's important, right? Or like getting people to add more things in their basket if pricing is going down is certainly important. I think it's hard to hold the price. I think it comes down to like branding and people looking for certain products, people looking for certain brands, and those brands have a floor. I think it's really hard to do in cannabis, like with an MSRP and hold that number. I think a lot of retailers will just kind of price it as needed. And I think the consumers, because the brand thing is still so challenging with the limited marketing, like per the Twitter conversation we had the other week,
Mm-hmm.
It's hard for consumers to come in and know that they're like getting a premium product and it should be at a premium price. Instead, they might just be looking for a recommendation from the bud tender. But certainly, being mindful of these things is important because what could happen is California could start to look more like Washington, look more like an Oregon, where you're sub $20 average item price. And, the assortment's not particularly different in Washington
Mm-mm.
than it is in California, but the price is significantly lower. So there's some risk there, and we'll see how the year pans out. But if the pricing pressure, continues as it is, this headline could be, very similar next year, but it could be balanced by like expansion. And this is what happened in Michigan. Michigan is balanced by, continued price pressure, but it's growing, with Detroit line finally, stores opening up. There's like a lot now, and it's driving the total sales of the market. So that top line number that you see is kind of brought up by just more access. So I think, in the macro level, like it's certainly important that, these markets continue to grow. They're still so new and still so young, and we don't want them contracting at the top line. But as an operator, you certainly want to do what you can to, maintain your price point or make sure that, more products are getting sold. If it's cheaper, then maybe they can throw in a little bit more, and maybe you can work on your margins on the back end to maintain that. Just get more efficient at producing your product. Some of that comes from scale. Some of that comes from, just looking at data. But yeah, certainly those are the things that are going to be so important if you're going to, as an operator, get through, this year and, potentially the next.
Yeah, and I mean, there is so much sensitivity here. I mean, when I'm looking at, for example, when I'm looking at Massachusetts, right, they had a total basket size increase of 31%. So we know more stores were opening in Massachusetts over the last 12 months. We did see a pretty steep decline in pricing, down 19% on average item price. And actually, interestingly, no change on average items per basket. But in real time, I'm watching on my data set with headset that what is going on in Massachusetts is actually that the prices are even going down more already in 2023. And we know this is because of the structure of the market where there was a ton of capacity built in the state, and that there's only 3 retail stores per vertically integrated operator. And so there's a ton of wholesale product hitting the market, and there's a lot of competition to get these products sold through because, as we all know, they expire, and then you have to write down inventory, and that is a unpleasant experience as a public company. So all of these things are coming into play, and so you are seeing pretty steep price decline already in 2023 in Massachusetts, or at least that's what I'm seeing and what I'm also hearing about from the operators I know in the state. So it's just going to be, I just can't get over how interesting and dynamic each of these markets are. And even so much so as we had oversupply due to some of the drifting of illicit market product into the legal market in California with the burner distro licenses and all of the other different structures that existed that enabled that. But from what I understand, this year is it's starting to kind of table off, and we may see some normalizing of that. And so it'll be interesting to see what happens next. So it one way to look at it is to start to panic. Another, the way that I always think about things is that where there are complications, there create opportunities. And so if you're looking at a dynamic brand or a dynamic operator, I would be living minute to minute trying to think about how we can navigate this changing landscape and really watching it come. I can't help but think back to VapeGate, when some people were operating on old information and they did not think that VapeGate was impacting their sales. And then they were caught off guard when they finally figured out the sell-through data was not real, or whatever they were getting from their distributor was not representative of the sell-through data, which you guys have access to. So all of this goes by way of saying I've watched too many cycles of the cannabis industry where you have to destroy product out for so many different reasons. But one reason that I don't think is acceptable anymore is because you got caught off guard about a shift in market dynamics. And so we are living in a time where we actually have information and we can be prepared as companies that substantially are vertically integrated and can pivot in terms of product and form factor and product size and pricing. So there's ways to do this. And I think there's also ways to have product strategies that we've talked about that don't mean you have to just go on what I call like the escalator to hell of promotional discounting of product, where you train your consumer to wait for always the next sale. So I hope we'll continue to grow up as an industry and really think about sophisticated strategies around merchandising. I mean, because your points too about Oregon, Washington, and California, we've been around for a while and there is a wide assortment. But as you always point out, Washington has a massive number of SKUs of products. And I don't know about you, but when I go into Washington retailers, it's almost paralyzing the number of products to select from. And I think that just makes it harder. And so one retail strategy that I know very well is to streamline your SKU in store and create more of a curated experience. And yeah, you want to have your table stakes brands that everyone's going to come in looking for, but you also want to have a point of view about what else you're selling. And that involves everything from unit sizing to pricing to what the brands represent to your core consumers who are coming into your door. So enough soapboxing, but I think instead of viewing this as as an issue, I would view it as an opportunity to continue to grow as an industry.
Yeah, it's maybe not the opportunity everyone wants, but it's certainly a good way to look at it and be mindful of it. Because I think if you survive this, you'll build some really good habits, that can pay dividends in the good times as well. It's the constraints that I think really make strong businesses. One thing that this headline, doesn't really capture as well is that we are coming off of pandemic sales, right, in 2020 and
Yes.
2021. And so when you look at just like, hey, the first year where the sales haven't grown, well, it's like, if you looked at 2020 versus 2019, when the pandemic started, if you look at the sales growth was like stratospheric, right? Like so many industries that were impacted. It's like looking at probably, the sales of Zoom, during that period versus, now where things are kind of getting back to normal. So there is a little bit of that that we have to be mindful of when you compare year over year. And I know it feels like a long time ago with the pandemic in those days of the pandemic, but even in 2021, we were still very much in it. There was like the summer where we thought it was finally done, and then it went right back to it. So certainly that's impacting some things too, and kind of skewing some of the numbers. So just be mindful of that. But I think the big takeaway is like, when you see headlines like this, it's like what is happening, and then what can we do to adjust towards it. So I think knowing that it's really pricing. The California market is getting more transactions than before, and continues to do so. Could it do more? Probably. It can pricing hold, maybe. But I think looking at these other markets and thinking about if it does get there, then it's you got to be extra mindful to your point. So we'll see. It may balance out. Maybe California will issue those licenses, and these operators will be able to have more distribution points. New retailers will pop up with access to the consumers that haven't had access previously, and they can come into the category. All those things may prove positive force in 2023, but they may not happen. And if they don't, then it's like, okay, well, you really do have to be mindful of this stuff. So
I'll tell you one thing.
yeah,
Elon's bringing people back to California from Texas, and
I
that's
saw
a
that.
very solid consumer base for cannabis.
Right. Yeah, he's back to
Those
the
are
valley.
our people.
Yeah, right.
Yeah.
Yeah,
Yeah. You know,
state.
I don't know. Maybe doing this, maybe being in California isn't so bad after all.
I don't think so. So when it gets added to the consumer price index, where does it fit? Does it fit in food and beverage? Does it fit in recreation? Or would you put it in other goods and services once they add it to the CPI?
I mean, I think of it as in food and bev.
Right. That's
You
what I
know,
was thinking too. But
I mean, it's a consumer product, but and you can eat it.
yeah, exactly.
Or
It's part
drink
of your daily staple.
Oh, I mean, especially if you invest in cannabis, I couldn't live without it.
Exactly.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.